I'll say franchising is like every other industry. You've got really strong players and you've got some that are not as strong, right? So, you may hear of a franchise that doesn't provide the support for what they're, or didn't live up to the expectations. So again, that's where we come in to try to help identify the top ones because, not every franchise is perfect.
Hello and welcome to Pillars of Wealth Creation, where we talk about creating financial success with a special focus on business and real estate. I'm your host, Todd Dexheimer. Now, let's get to it. Hello, welcome back to the show. I'm your host, Todd Dexheimer. With me, excited to have Jon Ostenson. Jon, how are you doing today?
Hey, Todd, doing great. Excited to be here.
Yeah, absolutely. Well, Jon, he's the founder and CEO of FranBridge Consulting, a two-time Inc. 5000 company. He's the top 1% franchise consultant. Jon's also the author of the best-selling book, the Non-Food Franchising book. Jon draws on his experience as a former Inc. 500 franchise president, multi-brand franchisee, in helping his clients select their franchise investment. So Jon, with that said, give our listeners a bit more about your background and we'll dive in.
Yeah, like so many out there, many of your listeners, spent many years in the corporate world, and very thankful for the experience. Had a good run, but had that desire to do something a little more entrepreneurial, and candidly didn't know what that looked like. Wasn't sure what the path was, and it was about 9 years ago that I fell into franchising. Had the opportunity to step in and serve as president of Shelf Genie franchise system, large franchisor across North America, and I supported all of our franchisees day in, day out, and that's when I really fell in love with the franchise model. I just saw firsthand how, diverse backgrounds could come together under a shared system of support and go out and become successful business owners. So really fell in love with the idea behind it. And long story short, ended up spinning off and, buying franchises myself on the franchisee side, oftentimes with operating partners, and started my consulting practice about 6 or 7 years ago. And it's just been a great run, been able to help hundreds of people step into business ownership all across the country. And really, end of the day, you could think of me as a real estate broker, but for franchises. So, we represent about 600 different franchises that are looking to expand and grow. And great thing is our clients never pay us a nickel. We simply get paid by the franchisor as a referral fee. So it's a nice, clean model. We're really able to help our clients.
Love it. Love it. When you think of franchises, most people think of, McDonald's or that type of thing. Your book is about not McDonald's specifically. Well, not just McDonald's, but non-food, right? So talk to me about some of these other franchises that are out there. Like what can people get into if they are interested in franchise? What type of businesses?
Yeah, and we've got nothing against the food guys. We need them, we support them, but my humble belief is there are easier ways to make money. There are opportunities out there that require fewer hourly employees, less capex investment, higher margins due to not having food waste, less susceptible to consumer whims, all those things. So, where we see most people going, and I'll start also by saying we've never seen so much interest in franchising. I think for a lot of reasons. I mean, the Wall Street Journal has a new article every day or two about how white-collar jobs are decreasing. Companies are boasting about doing more with less. AIs were displacing people. There's so many reasons, but our phone has been ringing off the hook for a while now. And diverse backgrounds stepping into things all across the board. Oftentimes they can take their skill sets and translate those into other industries in running a business where you have that shared support of the franchise system. So we're seeing a lot of interest in things like home and property services, a lot of smart money flowing in there, a lot of private equity is getting involved there too. A lot of interest in health and wellness related concepts. I'm happy to take this a layer deeper. We can get into more specifics, but we're seeing interest in categories like kids or pets or seniors. I'd say the general theme is people are looking for businesses that aren't going out of style, that are non-trendy, but they're understandable, cash flowing. Businesses that people are always going to spend on, right? And so that's the general thing that we're seeing. And obviously, there's a whole lot of different niches that roll up under those broad categories that I just mentioned.
All right, cool. I want to ask about, like why a franchise? So explain to me why you like the idea of a franchise. So there's so many options, or there's options out there for people, right? Buy a franchise, buy an existing business. There's a lot of people selling businesses right now, so why not buy an existing business that's not a franchise? Start your own business, right? So there's definitely options out there. Why would somebody choose a franchise versus some of the other options?
Yeah, well, franchising, obviously, you think of franchises, you think of the playbook, right? It's a proven business model. It's been proven out in other markets. So it's all about just going out and executing against the playbook. You've got a franchisor on the sidelines, and the better you do, the better they do. So, not every franchisor is created equal, but that's where we come in to help our clients find the best ones. The franchisor, that's like a coach on the sidelines. That's someone that's there guiding you. It sounds cliche, but you're in business for yourself, but not by yourself. You've got a team behind you on the sidelines that's helping you. Oftentimes this gets overlooked, but you're joining a built-in mastermind of other people running the same business day in, day out. So you're learning from each other, exchanging best practices. It really just shortcuts your way, to third base. You're starting on first base. You're not having to recreate the wheel. And so, franchising is not right for everyone. There's some people that are too entrepreneurial. They want to put their thumbprints all over the business. But for most people, they like the idea of having a proven system that they can step into and execute against. And it could be that they run a franchise. Down the road, they start their own business. The feedback I always get is their other businesses are always better off for having been a part of a franchise. So you brought up an interesting question on the existing business idea. There are a lot of people out there espousing the benefits of buying an existing business. That can be a great opportunity in some cases. However, it is like finding a needle in a haystack.
Yeah.
I have countless people reach out to me every week and say, I've been looking for an existing business for 3 years, 4 years, 5 years. I've been under LOI 6 times. Due diligence didn't shake out. Someone outbid me. Terms, and oftentimes then they step back and say, wait a minute, maybe franchising can make sense, because franchising obviously de-risks the equation, much like buying an existing business they assume does. However, there is inherent risk when you buy a business. You're inheriting someone else's team, assuming everyone's going to adapt to the new culture.
Yeah.
There's a culture already in place. You may lose key customers, and here you paid a premium for that existing business, right? So a lot of people, once they start thinking about it that way, they're like, kind of like the idea of putting my thumbprint on a proven business model from day one, and franchising makes sense.
Yeah, definitely. Yeah, I actually just had a business broker on, very successful business broker. He said a couple things that I thought was interesting. First of all, everybody talks about all these people retiring and that there's a ton of businesses becoming available. According to him, there's a ton of buyers out there that think there's a ton of businesses for sale, but there's not a ton of businesses for sale. The other thing is you've got to be really careful about buying a business with an owner that is involved, and you need to understand how much that owner is actually involved, because he talked about the guy that's literally has the Bluetooth, stuck to glued into his ear. It's like almost a permanent fixture. And he's on that thing 24/7, 365. He's the one running the business. If he leaves, which that's the guy is selling, so he's going to leave. If he leaves, that business is done. Nothing.
Yeah.
It doesn't have an identity beyond the actual person that owns it. So I think that's really interesting when you're looking at an existing versus a franchise. The franchise has the systems. The franchise has, I didn't think about that until you just mentioned it, but the franchise has coaches and a mastermind and a kind of a team that obviously they want you to succeed. That's their goal.
Yeah. Yeah, absolutely. No, it's good for the brands, but good for all of their businesses. So you really have some camaraderie. And again, I'll say franchising is like every other industry. You've got really strong players and you've got some that are not as strong, right? So you may hear of a franchise that doesn't provide the support for what they're, or didn't live up to the expectations. So again, that's where we come in to try to help identify the top ones, because not every franchise is perfect. That's just like in any industry. You have 4,000 franchise brands out there. One other last thought on existing businesses. You mentioned a lot of people out there looking. I can't understate that enough. And a lot of these are recent MBA grads. I mean, they call me all the time, and a lot of them will say, "Hey, would love to buy an existing franchise." Obviously, franchises are small businesses; they sell at some point. The fact is, every now and then we'll stumble upon a good opportunity. We can see all of those in our system But most of the time, franchise resales never hit the open market because they trade within the franchise system. Another franchisee will buy that.
Makes sense.
And from a franchisor's perspective, you'd rather have another franchisee that already knows the business and
Yeah.
been successful to buy it. So that internal M&A is really common. And I was talking with the client this morning that bought 2.5 years ago, launched the business, is doing great. He's now ready to buy another franchise through us. But I told him, hey, if there are any other opportunities in that franchise system to buy existing franchisees, that could be a good next step as well to kind of scale your empire before you go into a new brand.
Yeah. 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 Good point. Yeah. So it's almost I mean, it's your own little marketplace, right? If you want to continue to grow and expand, you've got it
Absolutely.
right there, that opportunity. So what does somebody look for when they're going, hey, I do want to start a business, buy a business, or potentially a franchise. What are they looking for when they're looking at the franchise? What makes a successful franchise versus maybe something that might be a little more difficult?
Yeah, oftentimes we talk about, the longevity of that franchise, how long have they been around, right? Because you do have a lot of emerging brands out there, a lot of newer ones. If it's a franchise that has over 100 locations, the odds are they may already have a presence in your market, and so you're going to be working around someone else's territory. They got maybe the best zip codes of demographics right early on, and so that's a little bit of a trade-off to step into one that's been around a long time. So a lot of our clients like the idea of going with more of an emerging brand where they get better territory rights out of the gate, and they can kind of grow with the franchisor. And some of the things we look at in a situation like that, we're looking at obviously the competitive advantages of the business. We're looking at what current owners in their system are saying about their experience, what we call validation. We're looking at the leadership teams. I'd say that's one of the most important pieces. I want to see not only industry experience on that team, but also franchise experience represented. People that have been there, done that, supported successful franchisees in their backgrounds elsewhere, that they bring that into the team. Obviously, we're looking at the financials, right? And if it's a newer brand that has a smaller financial set in all this is in the item 19 within the franchise disclosure document, the FDD, every franchise has one. Within the item 19, you'll see different levels of detail, but if it's a newer brand, they may not have a ton of detail. And so, smaller sample size, we want to see good meat on the bone, obviously. And we still want to take a conservative approach to our pro forma. But those are some of the things that we'd be looking at.
Got it. Got it. Um, so do you find that most people like to see the more established franchise or the kind of the emerging franchises, or there's like an advantage? I mean, obviously there's differences between the two, but what would you say to speak to those two?
Yeah, you get both sides. I'd say a lot of people that like the idea of a large existing franchise come around to the idea of an emerging one once they kind of dig in further, and they're like, wait a minute, I can get the prime territory in my market. That's a big piece,
Mm,
candidly. But they also like the idea of having a seat at the table, having a voice in the system, having that
mm,
personal touch, maybe, of the leadership team where you're not just a number. So it can work both ways. Oftentimes people say, well, I've never heard of this brand.
yeah.
Well, in food, brand is everything. In hotel, brand is everything. In fitness, brand's pretty important. In a lot of these services, I use installation as an example. Installation is a $52 billion a year industry. It's massive. Almost no one can name a brand of insulation, right? No matter
Yeah.
how big you are, that's just not an industry that lends itself to brand recognition. It's all the other characteristics, the support of the franchisor. That's what you're buying, less so than the brand name, if you will. Now, all these guys, it's par for the course. They have to do a good job branding. But again, some of these industries, are never going to be household names,
Yeah. Makes sense.
regardless.
Makes sense. Yeah. So maybe looking at more of what the industry is that you're getting into and what the household name is. There a household name or is there not? Because if there's not a household name, like you said, insulation, like there's no household name, at least not that I can think of. I mean, maybe there's brands that are more popular than others, but they're certainly not a common household name. So then don't focus on that, certainly. Um, what I know this is a difficult question, but somebody who's looking to get into it, how should they think about the amount of money they have to bring to the table? Are there financing options for them? Is there does the current franchisee, do they support? How does that look like? What does that look like?
Yeah, great question. So some of our clients are getting into things well into the seven figures. We recently had clients buy 10 trampoline parks, and those are like $3 million a pop. So
Wow.
you will have some of those exceptions. But by and large, I'd say 80% of the placements we're doing right now, when you look at the franchise fee and the startup cost and several months of working capital, essentially you're all in investment. You're in the range of, I'd say, 150,000 to 400,000 in that ballpark, and quite a few options kind of on the lower end of that range, quite a few just north of that range. Some people are using all cash to fund it. Most like the idea of leveraging, and obviously banks prefer lending to franchises versus other startups, right? It's just more predictable. So SBA loans are incredibly common. Probably 2/3 of our clients will use SBA loans. We've got some great lenders that we work with, where they put in 20% cash, use an SBA loan for the balance of it. They can always pay it back early. Then there's what's called the ROBS program, ROBS, and that's where you roll over a 401k or IRA from a previous employer. And so you're able to roll that over, set up a new account, and we've got partners that help our clients with this. You have to set up the business as a C corporation. You buy the business with the retirement plan, pay yourself a salary. So that's another way. Some people do that in conjunction with an SBA.
That's what I was going
Certainly,
to ask. Can you do that?
HELOCs, yeah. So there's a lot of different ways to make it happen. Government incentivizes business ownership, right? I mean, the tax code is written in favor of business owners. I mean, it just opens up the playbook, but they also incentivize, you to start a business, through something like the SBA loan program.
Yeah. Yeah. So you could essentially, if your cash required is $400,000 or $500,000, you could really get into that for 20% of that amount.
Yeah.
And if you have a nice 401k, maybe you don't have to take any cash out of pocket. You could use that 401k and get into that thing. I mean, it's still money down, but it's money that you otherwise couldn't touch, that you're utilizing.
Yeah, no, you definitely have a chance to make outsized returns. The trade-off to making outsized returns is, it takes more effort than just a passive investment, right? And that's something I try to never sugarcoat. I want people to know if business ownership was easy, everyone would be doing it.
Yeah.
It does take work. But again, you have that chance for outsized returns. You get the tax playbook opened up to you. You get the chance to, build an asset that you can sell one day or hand off to your kids. So, like I said, we're seeing more and more people. I'm in my mid 40s. I mean, multiple conversations every day right now with folks in their mid 40s. They've been grinding. They've built up a little nest egg. They've got a good life, but they're like, the guys are starting to look around. They're like, hey, a buddy of mine plays a lot of golf and he's a business owner. Hey, so-and-so's just upgraded and bought a lake house. Yeah, they're starting to notice, and they're like, if I stay on the path I'm on, it's going to be a while before I get to the point I want to be. And maybe if I apply myself, put in a little more effort, this is doable. And probably half of those that we work with make the jump and run the business themselves as an owner operator, oftentimes with the goal of replacing themselves over time. The other half star is what's called executive model or semi-absentee. You put a manager in place, let them run the business. They're coached by the franchisor. To do that, it just comes down to having a good person right in that seat and a good franchisor on the sideline. So it makes it doable. Half of our clients do it, but you'll still find yourself leaning in. It's not totally passive.
Yeah, that was my next question is how active is the franchise model versus being passive? Because some people want to buy that business. They've got the I talk to people all the time. Like there's a lot of real estate guys. I don't know if you're seeing this now, but there's a lot of real estate guys that they were doing real estate, and then commercial real estate, specifically multifamily, office and industrial, has turned. And so it's harder to find properties. And so they gave up, and they said, now we're going to go buy businesses. And so we're seeing that a lot. But they expect it to be passive. How passive and how versus active, I guess. And you could kind of already answered that, but maybe dive in a little deeper.
Yeah, and you're exactly right. I mean, you're seeing the same thing we are. We're seeing a lot of real estate investors moving over. I mean, I personally invest in real estate directly, Airbnbs as well as syndications. I think it's an all of the above strategy. And there's tax playbooks that complement each other on the passive
Yeah.
real estate side as well as the active business side.
Yep.
But yeah, we're seeing a lot of interest, just fewer deals to be had out there in the market, high interest rates, all that. So it is kind of the big debate. How passive can business ownership be? If you have a startup, I mean, it's never going to be passive, at least not for a very long time. Franchising, because you've got that support, a franchisor, they can carry a lot of the daily water, answering for you, answering questions, supporting that manager that you put in place. In my experience, and just seeing countless case studies as well as my own, it just comes down to having a good person in that seat. If you don't have the right person, you can have a great franchise system, you'll still find yourself leaning in. But if you have someone that you incentivize, that has fire in the belly, that's going to run the business like it was their own, it's doable, right? Within the franchise realm. So again, I just have countless client case studies where they put a great person in place and incentivize them, and they stay focused on their day job or they go start another business. But if you don't have the right person, you have to replace them. Yeah, you lean in until you have the right person.
Yeah. Yeah. That's it. I mean, when I look at anything that we own, it's if you don't have the right person in place, you're going to be, that has to be you. So you either have to have the right person in place or it has to be you. And even if you have the right person in place, you gotta expect to put in some time and effort and energy if you want it to grow and succeed. I think there's no question, in my opinion, in that you have to be able to be willing to put some time into it, especially at the start, right? It just, the earlier in you are, the more time you're going to have to put in.
Yeah, 100%.
So cool. What do you see that successful after they buy this franchise? What do you see that successful business owners do that maybe those who struggle don't do? What's the difference?
When it comes to franchising, and this sounds so cliche, I apologize, but it's true. They follow the system, and you have to remember there's a reason why you bought into the franchise system. Again, some people are too entrepreneurial. They think they're the smartest guy in the room, no matter what room they're in, and franchising is not going to be a good fit for them. But for so many, when I was a franchisor at Shelf Genie, I had 100 franchisees across North America running the same business day in, day out. Our top performers were the ones that followed the system the closest. No lie. And so I'd say follow the system. You've got to be halfway decent with people. It's business, right? If you're a jerk to work for or work with, you're gonna have a tough time. So you got to be halfway decent with people. You've got to be willing to spend on marketing and see, understand, business ownership is kind of this weird B2B, B2C, right? Because you're pulling out your wallet. It's the business's wallet, but it's also your personal wallet. And so, I'd say good franchisees are oftentimes willing to invest in marketing where the data shows that it's got a good chance of producing a good return, and then doubling down on that. Where people, there's going to be that point when it gets hard. You're 4 months into the business, and it's like, gosh, I'm ready to turn a monthly profitable P&L. I thought I would have by now. Do I cut back on marketing to make that happen? It's like, that's kind of that zone where it's like, no, double down on the marketing. Revenue leads to good things. That, you can't cut expenses enough to offset low revenue. So I think having that business mindset, and certainly if anyone has a background that's got any form of sales in it, I think that's beneficial too. Not that you're going to be the sales guy, but you know how to attract and retain and incentivize salespeople. I think that's a skill set too.
Love it. Love it. Yeah. The marketing thing, it's easy one to try to cut, but it's never a good idea. Right. unless you're selling like crazy, you can't handle the business. But usually you try to cut marketing when you don't have enough business and you're like, oh man, that's a big expense. Let me just cut that.
I love a little illustration. There's a franchise I was invested in a few years ago with a guy that he owned 80%. I was only 20%, but he would call me for questions, and I was kind of an advisor. I remember it was like the second week in business, he calls me. He's like, John, the phone's not ringing. I'm nervous. I'm like, hey, hang in there. Next week he calls, hey, John, the phone's ringing, but I can't close anybody. I don't know what I'm doing. I'm like, hang in there. Next week he calls, he's like, John, the phone's ringing and I'm closing people, but I can't keep up with the demand now. And I'm like, hang in there, right? It's just like, welcome to entrepreneurship, right? It's, if it was easy, everyone would do it. It takes grit.
How long do you feel like it takes? Obviously, this varies a ton, right? Depending on
Yeah.
who it is and what business it is and all that kind of stuff. But how long does it take that franchise owner to get established, to feel like they're actually making some profit,
Yeah.
and not just working for nothing, right? How long does it
Yeah.
usually take?
Yeah, I call it the oxygen of profitability. It's when, the revenue is offsetting your cost and, you're lying in bed at night knowing you're not losing money, right? And so,
Yeah.
I mean, there are businesses, if you jump in and you're running the business yourself, right, typically you have a faster ramp up. You're not having to pay a salary, right, in that case. I mean, there are businesses that have very low overhead models where you could be profitable in month two or three. I mean, but a lot of models, I'd say, would probably guide you to more like the 6 month mark. I always tell our clients, let's be conservative, assume it takes, a couple of months longer. I mean, there's some businesses that will be very straightforward and say, hey, you're not going to turn a monthly P&L until, month 12 or, 12 to 18. It's a long-term play. Maybe it's more of a B2B, business to business style operation where it's a
Yeah.
long sales cycle, a huge payoff down the road, but it takes a while to build those relationships and cultivate them. So yeah, as you said, it varies across the board. I mean, you've got some in the health and wellness arena where you can be profitable day one of opening, right? Because you've done a lot of pre-sales leading up to that. So
Sure.
the nice thing about franchising is you go in eyes wide open. During the exploration process, you're getting exposed to a lot of different things, but you're also getting a chance to talk to other owners in the system and asking them questions like, how long did it take you to get profitable? What are things you would do differently? How's the franchisor been supporting you? Anything eye-opening? And so you're able to go in with a full picture and to sign that franchise agreement.
What's the hottest franchise right now?
Yeah. Last year I would have said game day, men's health, men's testosterone just absolutely blew up. And I've had clients do very well with that. Um, let's see, this year, it's really across the board a lot. You were seeing a lot of interest in the senior space, and it's not just in-home senior care, but it's advisory services, helping, almost like a broker, playing the role of matchmaker between facilities and clients. There's a great senior health one we like right now where they work with facilities and come in on a regular basis and do exercise and yoga and stretching programs with personal trainers. A lot of interest in home services, whether it be like being able to recoat the floor in under 24 hours without having to sand, the proprietary products, a lot of like restoration type
Yeah.
businesses in niches within that, like cabinet restoration. So I'd say home and property services is probably top of the list. Health and wellness is close, different modalities of recovery, for instance, within that space. Mental health is big. But I'd say, with the aging population or people will always spend on their kids, right? So youth sports is big.
Yeah.
Mobile pet grooming, so many different niches.
Yeah.
And
Yeah.
we've
It's
got a
amazing.
couple. I'd say B2B services, largely, there aren't that many options in B2B services, like professional services and franchising. But right now, there's several that we really like in that space, which are an easy kind of tie into what a lot of people have been doing already in their backgrounds.
Cool. Cool. That's awesome. Um, John, what's your biggest, or what's a big mistake that you've made, or a mistake that you've made that you can pass down to our listeners, and how can they learn from it?
Partnerships. My wife has told me don't get in any more business partnerships. I think you enter in, you're excited, you've got the best of intentions, but you just really have to lay out every scenario that could happen and how are we going to handle it. So I've got little tips around how to structure the agreements, in a partnership that I've learned along the way. But good example there is, and this would be the one that's top of mind, would be, I had two business partners. We bought into several businesses together, several franchises, and one of them was the operating partner. Well, the other guy I had history with, we trust each other. We didn't know the operating as partner as well, but he spoke a big game, very confident guy, and he came in and ran the operations. Um, it was too late in the game. We weren't trusting and verifying on the financials, and he was driving revenue, but non-profitable revenue, and just really put us in a hole. And I wasn't thinking about the business correctly, and so we had to get him out of the business, and that was not easy to extract him. And he and my other partner wouldn't talk, and so I had to step in and be the mediator, and it just like life's too short for
Yeah,
doing
it gets
that. So
messy.
I'd say I'm very careful now when I enter into partnerships, exactly who's playing what role, what that looks like. And that's something I coach my clients on.
Yeah. Well, which is, you're talking about partnerships, and that's exactly really what a franchise is, kind of. It's a partnership. And so that's probably one of the biggest things is your due diligence to make sure
Yeah,
that that's the right partner to get in business with, which is, I'm assuming, a big role of what you do as a consultant and making sure this fits both parties.
exactly. I like for people to date around before they get married. So we'll have them talk to a good number of franchise orders. We'll present them the top X number, maybe 10 opportunities in their markets, just, and then we'll start to narrow it down. But I want to give them a good lay of the land. And then once they start taking different paths, they're able to compare and contrast maybe a small handful of franchises. And it's fascinating. Probably 90% of them end up in an industry that was never even on their radar. So it's a lot of fun to kind of hold their hand through the process, see the light bulb moments take place in real time. They start to prioritize the characteristics that are most important to them in a business, and they're able to compare and contrast. So yeah, you're exactly right. It's a partnership. It's a marriage. I think dating around ahead of marriage gives you a good feel for picking the right one.
John, you got two options if you're going to go buy a franchise. One, you can do it yourself. Two, you can use a consultant. Maybe there's more options than that, but those are the two I can think of. What is the advantage of using a consultant, and maybe the cost of using a consultant?
Yeah. If you go direct, there's a lot of noise out there. I mean, you'll see a top 100 franchise list from this publication or that one. Most of those companies are paying to be on the list. So you can't even trust those things. Like, there's just a lot of noise. And you never know if they're looking to expand in your area. So you can spin your wheels just like looking for an existing business. Using a consultant, it's entirely free. There's no cost. I'm essentially a real estate broker, but for franchises. So we represent over 600 franchises, part of the largest brokerage in the country. We work with companies that are looking to expand that still have good markets to expand into. And we simply get a referral fee on the back end, very much like a real estate broker would from the seller. None of that's passed on to our clients in any way. So it's entirely free to work with us. Again, my background, I've been a franchisor. I am a multi-brand franchisee myself. I've seen countless client case studies I'm able to bring in. So really able to help clients, think about it with a level head as they go through the process and weigh in on the important things. I mean, certainly we can help them find, we've got funding options, we have franchise attorneys that can review their agreement for them. So we've got resources, but we also have a lot of experience. And yeah, I love holding people's hands through the process.
It kind of sounds like a no-brainer, quite frankly. John, a couple last questions before we wrap up. What's a favorite book that you can recommend to our listeners?
Yeah, gosh, I've got so many books I love. I'd say The Compound Effect by Darren Hardy. It's just the idea. It's not rocket science, but it's the little steps that you take on a daily basis to add up to big things. It's getting off the couch, getting in the game, and taking small steps every day.
What's the name of your book again?
Yeah, non-food franchising.
Non-food franchising.
Yeah, and happy to share a free downloadable version with all of your listeners. Just come out to our website, franbridgeconsulting.com. Share your email address, and we'll reach out with links to the book.
Cool. Great. All right. Last question here. What are your 3 pillars of wealth creation?
Yeah. When I think of wealth, I think, I think through everything in the 5 domains of, in my case, it's, faith, family and friends, it's finances, it's fitness, which I used to describe health. And then lastly, it would be franchising, which other people would say business, but for me, it's franchising. So, the 5 F's. And I just think through my day that way. I think through my goals for the upcoming quarter, upcoming year, through those 5 domains, and just make sure that I'm aligned with what I would say is important. And, I think wealth is a big piece of it. Money doesn't buy you happiness, but I have seen countless case studies where it buys time that buys happiness. And so it just gives you optionality and allows you to control your time. And like I said, we're only here a short time.
Yeah.
You want to make the most of it. You don't want to miss out on those moments. I just got off the phone with a client a few months ago that, was saying how he wished he had done it sooner, but he's been in business ownership now for 2.5 years. And, he doesn't miss his kids' sporting events. He's not having to travel. He's involved in the community, sponsors the Little League baseball team. Like, he's having the time of his life. He's like, has it been easy? No. Is it incredibly rewarding? Yes. And now I'm ready to buy the next franchise brand. What's next? I love that.
Those are great stories, right? You love those. So, John, man, really appreciate the time. How can our listeners get in touch with you?
Yeah, come out to our website, franbridgeconsulting.com, FRAN, bridgeconsulting.com. Like I said, share your email address. We'll reach out with links to our book to download the audio version or the PDF version. Certainly, if you would rather buy it online on Amazon, all the proceeds go to Hope International, a great nonprofit that we support. But also, when we reach out, we'll send a link to my calendar too. So if someone wants to take a next step, entirely no obligation of any sort. But if you want to chat about it a little further, I'd be happy to get on a call and help in any way I can.
Awesome. What's Hope International? Tell me a little bit about that.
Yeah, I've been on some mission trips with those guys. Think really highly of what they do internationally. So they're helping. It's more the idea of a hand up versus a handout, and just empowering local entrepreneurs in communities. Giving them loan programs and other sustenance that allows them to develop businesses so that they can support their family as well as their community.
Hmm.
So it's ongoing. So it's having positive impacts. It's a faith-based organization, but they're doing it through sustainable commerce over time.
That's great. Awesome. We'll go, John, man, this has been good. Appreciate you. Appreciate the time. And listeners, reach out to John if you got questions. I think, look, if you're looking to buy a business, build a business, I would say this is at least an avenue you should check out. It might not be the avenue for you, but I think it's probably worth taking a little bit of time and exploring it and seeing if it could be a fit. Maybe you have the wrong personality for it. Maybe it doesn't work for you, but to me, I think exploring all your options is the best way to go.
Thanks, Matt. Thanks for having me, Todd. Really enjoyed the conversation and look forward to helping.
Absolutely. Hey, thanks so much for listening. I appreciate you being a loyal listener. I would love to have you go on to our Facebook page and subscribe, give us a thumbs up, go on to iTunes or wherever you listen and give us a rating and review. Don't forget to subscribe. Your rating and review just helps us push this out to more and more people and continue to grow our audience and hopefully positively affect a ton of people out there that really need this and want this. So the other thing I've got for you is a free ebook on my website. So go on to venturedproperties.com, and download our free ebook on real estate and on syndication. And I've got some data points in there, some really good stuff for you. So I'd love to have you take a look at that. It's free. I'm not expecting anything from it. And also, look, if you want some help in multifamily, want some help learning, growing, getting your business off the ground, I would love to talk to you about what it would look like to work with me potentially and see if that's a good fit. So you can go to coachwithdex.com and check that out. And we can definitely have a call. Thanks a lot for listening. You make it a fantastic rest of the day. I'll catch you on the next episode.